Has the Florida housing market peaked? Is it about to crash? Or is this bubbly market going to get bubblier? That is exactly what we are going to cover today. And I know there is a lot of fear, uncertainty, and doubt out there. And I've been accused of being a FUD creator. And if somebody didn't finally tell me what that acronym meant, I probably would have continued to think it had something to do with Elmer Fudd and Looney Tunes. And make no mistake, this market is absolutely Looney Tunes. But we're going to do a deep dive into the Port St Lucie market. We're talking about St. Lucie and Martin County. And I have absolutely no problem with anybody assigning whatever narrative it is that you want to. But the truth is, the data that I'm sharing is not in question. It's the most recent housing market data that exists. And the numbers don't lie. But I am extremely excited to do a deep dive into this metro because the last time I covered it, home prices had dropped significantly. They were down something close to 19%. So I want to see if that pattern was repeated, and now we have a trend. And that trend of price declines is not your friend if you're thinking about selling in that metro. It's certainly your friend if you're thinking about buying, if in fact that trend is confirmed. But it would be completely irresponsible of me to talk about any of that if I did not share the most recent breaking news, because Big Papa Powell is at it again. And my rate prediction was dead wrong. There was no decrease. The Fed increases rates a quarter point, but they signaled a potential end to hikes. And just so we're all on the same page as to, is Big Papa Powell who he thinks he is? Well, he don't lie, he don't lie, he don't lie. Jerome Powell, he is very consistent, unlike my singing talents. But as analysts expected, the Federal Reserve approved their 10th interest rate increase in just over a year. And they dropped a tentative hint that the current tightening cycle is at an end, up until they drop a tentative hint that it's not. The central bank's Federal Open Market Committee raised its benchmark borrowing rate by a quarter percentage point. And to be clear, because sometimes there is confusion about the difference between what the Fed funds rates are and what mortgage interest rates are. They are not the same thing. The Fed funds rate is what banks charge each other for overnight lending, but it feeds through to many consumer debt products such as mortgages, auto loans, and credit cards. So it does have an impact. And while I'm not going to read the whole article because I don't want this to be a 10-hour video, the Fed reiterated that they will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. And they went on to say that the tighter credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. Well, thank you, Big Papa Powell. Well, I really appreciate that measure of transparency and guidance because I would have been totally clueless without that statement. No shit, Sherlock. Of course, tighter credit conditions are going to impact households, businesses, and likely weigh on economic activity, hiring, and inflation. Everyone knows this, but they went on to say something, and I highlighted it here, which reminded me a lot of Ben Bernanke and what he said right before the great financial crisis, when he touted the strength of the economy. And he said there was almost zero risk to real estate because a massive national real estate crash had never happened before, up until it did. Nonetheless, the statement from this week's meeting reiterated that economic growth has been modest, while job gains have been robust and inflation is elevated. I'm not sure how that sounds to you, but to me, it is completely tone deaf because despite the numbers that they publish, which are manipulated and are not accurate, the economic growth has not been modest. It's been on the decline, which is what a recession is. And job gains have not been robust. And I don't care what job gains they claim, the unemployment numbers are completely manipulated. They're not using the right metrics. And job gains have not been robust, they have been anemic. And layoffs are coming. And then to add insult to injury and completely insult our intelligence, they have the audacity to say that inflation is elevated. Elevated? Inflation is skyrocketing, and inflation is compounding, and inflation is no bueno for anybody in any market anywhere. And although headline news stated that the Fed hinted that they may stop raising interest rates, I don't see it that way at all because there was no hint. All they did was omit specific language that has been in previous announcements. And I don't think that omission means anything at all because Big Papa Powell has told us exactly what he will do in order to bring down inflation. And I'll be very interested to see how mortgages trade and what mortgage interest rates are based on this latest hike. Yet to be determined, I don't know, but I suspect based on this latest language that mortgage interest rates are going higher. And I doubt they've peaked. But let's see if the Florida housing market has peaked by doing a deep dive into the Port St Lucie Metro, which of course consists of St. Lucie County and Martin County. And what you can see is that closed sales in March of 2023 were down almost 16%, and cash sales were down 18%. Median sales price is on the uptick in Port St. Lucie, up 5.5% from 383 to 405. Average sales price, massive whopping jump, up double digits, up almost 20%, 19.3% to be exact, from 477 and change to 569 and change. That is a big jump, and that absolutely reversed the trend of the loss that we saw last month. And I will do a deep dive to give you historical perspective so you know where we are today versus pre-pandemic numbers. Dollar volume is on the uptick. Median percent of original list price received is down 5%. Bye-bye 100%, hello 95%. Time to contract up 355% to 41 days. That is a return to normal because 9 days is an insane seller's market. Median time to sale, 79 days from 50, an uptick of 58%. New pending sales, down 9%. New listings, down 17.5%. Less sellers are interested in selling their home if they've got to trade up into a 7, 8, 9, 10, 100% mortgage. They don't want to trade out of a monthly mortgage payment that they can afford and lets them max out their life and not be house poor. And I suspect there are many folks who did not run the numbers and did not understand their finances who are feeling somewhat house poor because their mortgage payments are astronomically higher than what they were a few years ago. Pending inventories down almost 23%. Active listings, the listings sitting on the market, unsold. Your competition, if you're thinking about selling, your choices, if you're thinking about buying, is up 134%, almost 135. In March of last year, there were 817 homes sitting on the market unsold. And in March of 2023, there were damn near 2,000, 1,918 to be exact, but that is a big shift. A jump from 1 month to almost 3, 2.9 months to be exact, in terms of months supply of inventory, an increase of almost 200%. And while it's not officially a buyer's market yet, it certainly feels like a buyer's market compared to the recent past because buyers have far more leverage. But in terms of has the market peaked yet, the answer is obviously no, because the average sales price is up 19%. In fact, March of 2023 was the trend buster, because although I knew there was some big declines, because I've been covering this market for a long time. And if you've been watching, you know that I've been talking about the declines that have happened in terms of average sales price. And February was a loss of 3%. January was a loss of almost 13%. December was a loss of 6.3% in terms of average sales price appreciation. There were lots of declines. And while 2 months is a pattern, 3 is a trend, 4 is a trend confirmed. And March busted that confirmation because it was up 19.3%. And to be clear, average sales price is not the same as median, and I will cover that next. But average sales price I find to be more instructive because it includes all price points, not just the middle terms. It doesn't exclude the low and it doesn't exclude the high. And most of the markets that I have buyers shopping in are priced more similar to average sales price than median. Year to date, average sales price is up 3.1%. March, as we already covered, up 19.3. And in addition to wearing egg on my face in terms of my prediction as to what the Fed would do today with interest rates, where I was dead wrong, I also am dead wrong because I know the last time I covered this market, I said something to the tune of the days of double digit growth in this market are over. And clearly, I was wrong because double digit gains in terms of average sales price are back on the table, 19.3%, which happens to be the biggest percentage gain yet over the last 12 months. And so I know that I said bye bye 12%, bye bye 14%, bye bye 11%, bye bye 17%, bye bye 17.2%, bye bye, bye bye, bye bye. Well, hello, Dolly, because I was wrong. Double digit gains are back on the table in the Port St Lucie Metro, and the market clearly has not peaked. And while I am on the record as stating that I suspect that we're going to continue to see single digit growth in most markets within the state of Florida, I might have to revise my estimate and get more bullish. We could be looking at double digit growth in some markets. And to be clear, this is a very distorted macro picture because the hyper-local markets that you're shopping in are going to trade differently. They'll have their own intensity of supply and demand, and the prices are going to reflect that. So average sales price in this metro is not the same as what you might be paying in the hyper-local market that you're shopping. But it is instructive to know. And to ensure that we have historical perspective, I think it's important that we look at the bar graph on the bottom of this page, because what you can see, although we're not at the peak of where we were when the average sales price was $570, $211, we are not too far off from that peak. So to answer my title's question, has the housing market peaked in Port St. Lucie? No, I suspect it's going to get bubblier because we're at 569, 677 right now. And to be clear, I don't mean right now. This is a month old. This is March. And we're in May. And March numbers will not be reported until the end of this month. So what we're looking at is old news. But it is instructive because the trend has been busted. But if we look back in history and look at pre-pandemic numbers, you can see that in 2019, you could buy a single family home for an average sales price somewhere close to 300 grand. And we're damn near at 600 grand, almost 100% appreciation, which I don't believe is sustainable. But I've already demonstrated that what I think is irrelevant because the numbers don't lie. And the trend is not your friend if you're shopping for a half price home. Those days are not coming up anytime soon, up until they are. Which takes us to the story behind median sales price. And the median sales price is always going to be lower than the average sales price because it excludes the extremely high and extremely low numbers. It gives you the middle term. And the median sales price in March of 2023 was 405, up 5.5%, single digit appreciation. And year to date, single digit appreciation, up 3.2%. Now, you would hope that I would learn my lesson, but I feel pretty confident in stating that the median sales price is not going to be seeing double digit gains anymore because it excludes the higher price point sales. So, gone are the days of 19.9%, 21%, 25%, 24%, 20.5%. Those days are over in the near term as far as median sales price is concerned in the Port St. Lucie metro, up until it's not. At which point I'm going to start wearing a dunce cap or ask Ben Bernanke if he can get me a job. It seems like I might be qualified to help the Fed understand economic conditions. But to be clear, I'm not an economist, I'm not an analyst, and I'm not an orthodontist. But I was a stockbroker for 20 years, and I do have a perspective on history and bull and bear markets. But nonetheless, median sales price, if we look back in history, you can see that we have not hit the peak yet, but we are damn close. But if we go to 2019 pre pandemic, you'll notice that you could buy a single family home and expect the median sales price to be somewhere around $250,000. 250. There are homeowners in this market and in every market within Florida, depending on when they bought, sitting on a metric shit ton of equity because the median sales price is $405,000 as of March, which takes us to new listings in the Port St. Lucie metro. And to be clear, supply and demand will always dictate price. And I suspect with this latest move by the Fed that demand is likely to decrease because they just increased Fed funds rates. So I suspect mortgage interest rates are going to continue to uptick, which will diminish the amount of people that are ready, willing, and able to buy a home. But to be clear, there are 1,400 people who move to Florida every day. Many of them like the affordability relative to other markets that exists in Port St. Lucie. So while there are less shoppers, make no mistake, there is still demand and there are still shoppers buying homes because it's right for them. And if it's not right for you, for the love of God, please do not buy a home. But new listings we must be aware of because we need to understand the supply side. And this is only one part of the supply side. This is the new listing supply. And new listings were in short supply as of March 2023, a short supply of 17.5%. Year to date, there's a short supply of 8.4%. You'll notice that there is volatility in terms of new listings. And in some months, there's a deficit. In others, there's a surplus. So while there's a 17.5% decrease year over year in March of 2023, as far as new listings are concerned, there was an increase in June of 2022 to the tune of damn near 22%. And you can see by looking at the chart, there is tremendous volatility in terms of new listings because those sellers are uncertain as to what the right move is for them. And if you're thinking about buying or selling, you must have certainty as to what you're doing. And you most certainly must know what the housing market data is in the hyperlocal markets that you're shopping. And I'm committed to sharing the hyperlocal market data that exists within my market and every metro within the state of Florida. So if you ever have any questions, concerns, or you have uncertainty, please reach out. And if I cannot help you, I will connect you with the expert who absolutely understands the hyperlocal market conditions and can advocate and negotiate for you the right way. Because ain't nobody overpaying for a home on my watch. New listings in Port St. Lucie are in short supply, at least compared to a year over year basis. But if we look back at the chart and see what it looked like for historical perspective, you can see that back in 2019, there were damn near 1,200 homes that were new listings. 1,200. We're at 888. And I'm just going to round that up to 900. There's a big difference between 900 and 1,200 new listings. And while there's a short supply as of March, We are trending to a more normalized market, a return to normal as it relates to new listings. But the inventory of homes sitting on the market unsold, the active listings that are your competition if you're thinking about selling, and your choices if you're thinking about buying, tell a radically different story. Because with new listings, there may be a short supply, but with active listings, there is a massive surplus. There's an increase to the tune of 134% in March of 2023, with 1,918 homes sitting on the market unsold in the Port St Lucie metro. And year to date, it's even worse. There's a massive uptick in the supply side of homes sitting on the market unsold to the tune of a monthly average of 2,092 year to date, up 166.8%. And let's round up 167%. Buyers have far more choices than they have in a very long time, and sellers have far more competition than they have in a very long time. And if you look back over the past 12 months, you'll see that there has been a massive uptick in terms of inventory in every month of the year, with the exception of March of 2022, where there was a decrease of 26.1%. Well, that is instructive, but it's completely meaningless because it is so lagging. The current market tells you that the supply side is no bueno if you're thinking about selling, and muy bueno if you're thinking about buying, unlike March of 2022. But if we look at the graph on the bottom of the screen, we get historical context. And although in March, with a massive uptick of 135%, we are a far cry from where we were in terms of active inventory sitting on the market unsold when compared to 2019, where there was somewhere in the neighborhood of 3,500 homes sitting on the market unsold, which is a long way of saying supply side's on the uptick, but it's nowhere near where it was pre-pandemic. But the supply side story would be incomplete if I did not share what the supply side looks like in terms of dollars and new listings by initial listing price. And while we already know there's a shortage of new listings, I want to know what the shortages look like in each price point. And what you can see is that every single price point, with the exception of the highest price point bracket, is in short supply, which is very instructive information to understand if you own $1 million plus home, because the $1 million or more, and or more could be to infinity, is on the uptick. There were 90 new listings $1 million or more in the Port St Lucie metro, which means there are far more choices and far more competition in the $1 million or more market. But every other price point is experiencing a shortage of new listings. But again, that's only half the story. We also need to know what the inventory by current listing price is in order to understand the markets within those price points. And what you can see is that the lower price point inventory is in short supply, a decrease of 71.4%, a decrease of 50%, a decrease of 100% in the lower price points. But as we get into the higher price points, you can see that there is far more inventory than the recent past, with single family homes priced between 200 and just under 250,000 upticking damn near 93%. There are 52 homes sitting on the market unsold in that price point in Port St Lucie, 250 to just under 300, an uptick of damn near 98%. There are 93 homes sitting on the market unsold in this metro, 300 to just under 400, up 194.2% year over year. 403 homes sitting on the market unsold, praying to the sweet baby Jesus that some buyer is willing to buy their home. And there are a lot of sellers out there doing a heck of a lot of praying in this market because the unsold inventory is stacking fast. And single family homes priced between 400 and just under 600 is up 142%. 716 homes sitting on the market unsold, 600 to just under a million, an uptick of 154.5%, 341 homes praying for an offer, and single family homes $1 million to infinity upticked 103.6%, with 285 home sellers praying that a buyer will come and deliver them the goods and help them tap into the equity that they think they have. And based on the average and median sales price, they do, up until they don't. But there are 285 single family homes sitting on the market $1 million or more in the Port St Lucie metro, which takes us to distressed sales in Port St Lucie metro as of March 2023. And I can tell you that distressed sales throughout the state of Florida are a non event because homeowners have more skin in the game and they're sitting on a metric shit ton of equity. And it's going to take a lot of time for the pain of recession and the financial uncertainty which is associated with it to create distressed sales. Because anybody thinking about selling will simply sell the home and they'll capitalize on that equity. But that won't last forever, and not everybody is going to do that. But when everyone feels the pain and wakes up to the reality of where they're actually at, if all of these people that are thinking about selling, even though they're not in distress, they just decide they want to sell, if they all hit the market at roughly the same time, then you're going to see a massive uptick in supply. And if demand does not absorb that, well, let me tell you what happens. Poof! Goodbye! The market crashes and home prices reset to the downside. And while I suspect Florida is more insulated than other markets, and my market in particular is more insulated than other markets within Florida, I do know that there are plenty of markets throughout the United States that are going to get crushed. And that's no bueno for anybody. Now, I hope you found this content valuable. And if you did, please subscribe to the channel, give it a thumbs up, share it with a friend. If you're thinking about buying or selling anywhere, reach out directly because we would love to help. And check out my next video because I suspect you will love it a lot. And until next time,